Hi, everybody. Welcome back again for another episode of 15-Minute Fix. We
Mhm.
are really excited to talk to you today about our perspectives on cash versus credit. Kasha and I have both had our own financial journeys and have learned a lot along the way. So we're just here today to share some of our tips and tricks with you and to help you along your own financial journeys. Now, something that I want to be sure to point out while we have expertise in a lot of different areas, this perspective really is from our own experience and things that we've researched and learned during our journey. But for your own personal journey, we would definitely recommend that you connect with a financial professional, whether it's an advisor, someone through your bank, et cetera, to get specific advice about your own financial journey. Kasha, I think this is a really great topic. You and I, as with a lot of things, I think have had opposite journeys when it comes to how we manage our money and how we go about it. So on my end, I think that I have probably experienced more things on the financing end versus Kasha. She'll share a little bit about her journey. I think that you've heard there's pros and cons to both, but we just want to talk a little bit about how to navigate this process for your own journeys. Something that we want to consider, we'll look at how to use credit to your advantage, how we can avoid interest, as well as buying or paying for things within your means, and then understanding the credit rating system. And then we'll give you some great resources that you can use along your journey as well. So, Kasha, why don't you share with us a little bit about your perspective?
Yeah, so I remember the first time we had conversations around lending each other quarters when we were 5 and 6 years old, and were we going to ask for that back with interest? And it kind of spiraled from there into our own borrowing and lending, borrowing and lending journeys, and probably some usury. So, so an interesting statistic though that you and I have talked about is that there's about 18% of adults between the age of 18 and 24 that say they don't check their credit score on a regular basis. So one of the
Wow.
things I wanted to ask you about, Kim, as we talk about this topic today is that a cause for concern? Should people be checking their credit score on a regular basis or with a lot of vigilance? Let's talk a little bit about that. How important is that credit score and checking that regularly?
Absolutely. So I think something important to consider is that whether or not you are someone that relies on credit as a part of your financial journey or you are a cash payer, there are a lot of institutions that utilize the credit score for different things to determine your ability to be able to get a job, to be able to do business with their company. So even if you're not using credit per se, I think you need to have some visibility to your credit score.
Hmm.
Some things to take into account are, you can use credit to your advantage. Again, whether or not you're using it as a tool or just to have visibility because you know that other people are using it. And there are some reasons why people would use credit versus using cash. So, for one thing, if you've been able to save over time, that takes away some of your liquid or cash assets, right? So the credit really gives you an opportunity to be able to spread that over time. And there are smart ways of doing that so that you are not continually paying into interest. Because, gosh, I think when we were talking about this, you said credit is using other people's money. So I think it's important to set that perspective as we're talking about credit today. We're talking about how and when we are using other people's money versus using money that we have been able to generate and save for certain purposes. Credit really gives you the opportunity to pay something over time versus having to put all of that cash up front. So I think there are some advantages to that we can discuss. Something that I have always also found, having worked with a large credit card company for several years, there are certain protections that are offered when you make purchases with a credit card that you wouldn't otherwise have if you're buying cash. And when I say that, I mean the actual benefits of the card. So if that's your either earning points or cash back, or there's other benefits that are built into it. For instance, I have a credit card that if I pay my phone monthly payment with it, they actually would replace my phone if it was lost, damaged, or stolen just by having paid my account. And that's a free service that's already included with that credit card that does not have any other type of fee associated with it other than the interest if I carry a balance. So that's some of the protections that I think of when I think about whether or not I would use credit versus cash for a purchase. What about you, Kasha? What's some perspective that you take and tell us a little bit about how your family manages that?
Yeah, so my perspective is thinking about using or borrowing money from other people gives me a knot in my stomach because I know that they're coming back for it, right? They're coming back for not only that, they're coming back for interest if it's not paid when they ask for it. And not that, I have a problem thinking I wouldn't pay it back on time because I tend to be very disciplined and responsible with things. But I don't know, just the thought of it gives me a knot. And so I've never really gone down the credit path. Now, I will say, that I will check my credit score on an annual basis, if not more. I understand how credit should be used or what it looks like or the different means by which people will need to see it for the different bills that my family and I have. But just generally using credit cards or credit on a regular basis is not a path that I've gone down really for the reason that it just gives me a knot in my stomach and I want to just not, and you talked a little bit about this, and I know you will some more, but quote unquote, live outside of our means. So kind of just a baseline way of looking at it was if you don't have the money for it up front, or even if you do, just pay with what you have, never borrow what you don't have.
Yeah, and I think that's an important point, Kasha, because a lot of people get into trouble using credit because they don't have that education behind it, or because they've never used it. They have that apprehension because of all the negative things that are out there about credit or credit cards. I think is probably some of the most common types of credit. And I think what I've learned in my own journey, while all those caveats do exist, there is a really powerful way that you can use those things to be able to get some advantage. And again, we're not recommending that one thing is better over another, just to give you a perspective from both sides to be able to understand, to make the most educated decision for yourself and your family's journey with money.
In addition to not being educated about the process, I think that people use credit when they don't have money versus using credit and having money to back it up and immediately pay it off. Yeah. That's the thing. If you don't have money for something, don't go out and use a credit card in lieu of money that you don't have, right? So you should have it because you have the money to pay it right back off, but there may be some additional benefit.
Yeah, absolutely. And something that you brought up, Kasha, was about interest, which I think is one of the primary reasons that a lot of people choose not to use credit. Now, there could be a situation in which, let's say you're going to buy a new stove and you decide to buy it, or you have to buy a lot of appliances, which, can easily add up to a couple $1,000s. So you go to somewhere where that is a reputable place, and we know there's lots of ways to get it. We could probably do bargain shopping on another one, but let's say you go to somewhere like Best Buy and you decide that you're going to end up spending about, $3,000 to $4,000 on some really nice appliances that you've had your eye on for a kitchen remodel. Well, in that case, they may have a situation where they have a promotional offer. So, hey, 0% down, 0% interest for the next 12 months. So something to consider is, if we're talking about that, you have the opportunity to, number one, as long as you pay it off within that promotional time frame, avoid interest. And then, really, again, kind of save that cash that you can maybe use for other things while you are paying that off slowly in that time frame. The one thing that I wanted to put out is what I have learned in my credit journey is if you have an opportunity to do something like that, where it's either low or 0% on your financing, you could take advantage of that to keep some of your liquid assets, but you need to make a plan about how you're going to pay that off before even signing on the dotted line, right? So you want to have a plan. You want to make sure that that is within your means to pay off within that amount of time, and then look at the cost of what it will cost you after that promotional balance. Because, and we can get in again into a lot of that, but you need to understand the terms by which you are borrowing that money and determine if it makes the most sense to either save that cash right now and take advantage of payments, or if it just makes the most sense to pay it off. Because sometimes when those promotional balances end, they may backdate the amount of interest that you pay. There's a lot of things to consider. And then, as you consider making those payments, that should already be figured into all of your other payments and budgets for that month. So when we say pay within your means, you should already figure out what that looks like for you and for your family if you are going to decide to move that. Kash, can you talk a little bit about, in your case with your family, you focus, I know, mainly on cash purchases. How have you managed that for larger purchases?
So going back to your appliance example, right? I remember one time that we moved and there was I shouldn't call it this, but there was an ugly white kitchen set, a white stove, this old dated white fridge, a white range, hood, microwave, all of it. And we said, hey, let's go out appliance shopping. We're going to renovate this kitchen and flip it. It's going to be great. And then we found the realities of how much it costs to redo a whole appliance set at one time. And we're like, I'm sorry, you want how much for stainless steel appliances? I guess we'll be eating off an ugly white stove until, a few months from now when we save up to buy the whole thing at one time or replace it piece by piece, which was going to bother my OCD because, you don't want one white appliance and the rest stainless steel. And so I just figured out how much with my husband that, okay, how much is it going to be to get the whole set, and then we just saved in increments until we could get the whole set at one time. By the way, shameless plug for Best Buy Outlet. If you all have not heard of it, their prices are amazing, and that's where you can get great appliance sets.
Yeah, thank you for that shopping tip. Again, we will probably come back and do something about bargain hunting because both of us, that's one area where we both love. But something important that you said, Kash, is about the planning piece. And so I wanted to point out that similarity, which is whether you are using credit or you are saving to buy something for a larger purchase, it both takes a considerable amount of planning. And so you don't want to go into either one of these situations blindly. Obviously, there are, some opportunities where you may have an unexpected large purchase, which is completely understandable. But if you have the opportunity to plan for something, so in Kasha's case, they were doing a renovation and you know that you're going to be buying cash, look at what your savings looks like and what you would need to save. And again, on credit, we want to plan if we are going to be making that large purchase on credit to be able to minimize any additional costs from interest or other fees. So I think that's a great point. And, whenever talking about credit, the credit score itself is a whole other concept that, again, we said that it's important to have awareness on whether you are using it because you are opening some type of line of credit or you just are needing to have visibility to it so that in case that anyone is looking for it, it's not something that prevents you or impedes you from getting to the goal that you are trying to set. So there are a few major parts of that make up our credit scores that as you look at your reports, you should be looking at. So your payment history, so how timely you are paying on your bills, your credit usage, so what percentage of your opening credit are you actually using? So are you carrying a balance or are you able to pay it off every month? So that's what we talked about, kind of staying within your means. The age of your credit account, so how old are the accounts that you have open? They want to know, are you on the new side of owning or opening lines of credit, or do you have experience being able to manage these accounts? And then account mix. So you have a lot of different types, loans, car loans, credit cards, mortgages are all something that they consider to see how you manage those accounts. And then last but not least, credit inquiry. So every time someone applies for a line of credit, how often are you doing that? And that number that on there is lower than you think that they want you to have, which sounds kind of counterintuitive, right? And there's some nuances with the credit score, and you can really dig into each one of those to understand what they mean. But just understanding what your score is and how it's comprised so that as you're building credit, you know what to focus on, I think is really important in taking us through this journey. So, again, while you should have awareness on that, the other side of that is on the cash side. So if we're looking at the cash side of this, Kasha, what are some other ways that you've encountered, although you primarily do not finance, that you've had visibility to your credit score through different processes?
So in the market for a new car, for bills, opening up a phone bill, opening up a utility bill, people will run your credit. for things like that. And so even though we were not using credit cards, our credit score was involved in that process. And so there are a lot of different ways that I don't want people to be caught off guard about, that your credit will be used. And sometimes, like you said, Kim, you brought up a good one, even as it relates to jobs. And some people think that's very unfair. Why would they run my credit? That's one of the considerations that happens a lot of times with jobs. And so just take that into consideration and make sure you read the fine print. They tell you how and where they can use that and when, and what kind of report that you're entitled to after they run it.
Yeah. And I think that one way that we can look at it to help, create a broad spectrum across both, either cash consumers or people that are financing, is a credit is a way for a business who is likely just getting to know you to understand your level of risk as someone who is a consumer with them, or companies use that as your level of risk if you're going to be an employee with them. So I think a lot of times where it comes up is, if you are working with certain jobs within the government, let's say, or in institutions where you would be handling money specifically, or working with credit in some sort, or any type of financial tools, typically they want to see if there are any risks, because typically people with higher scores are considered a lower risk, and people with lower scores are considered a higher risk to these organizations. So I think it's important to understand and look at credit in that way, and to see how it impacts us, and to know how to make adjustments when needed, and build along the way.
So it's kind of like, even when you're not applying for a job, a resume or a cover letter, a way for a business to know something about you, where they really know you, which is interesting, Kim, because another interesting fact is that there are about 50 million Americans as of a few years ago that had no credit score. And so businesses kind of look at that and say, well, how do we know you? How do we know what you're going to do? How do we know if you're going to repay us? How do we know if you're going to be fiscally responsible? And so that's interesting. A lot of people have no credit score and have not built their credit at all.
Yeah. And I think in many cases, to your point, you've not had to use a lot of credit. You've tried to be more rigorous with your savings. But something I think that a lot of people encounter are maybe buying a car purchase, right? Usually we have to do that pretty early on, especially if you live in a city where there's not a strong public transportation system. You may be looking to buy a car. That's one thing in particular that I kind of wanted to look at, a cash versus a finance. In my particular journey, it's important to me to not have a car that, I will have to always have in the shop, or I'd be worried about breaking down. I travel quite a bit. I'm usually traveling alone, and want to make sure I have reliable transportation. So for me at this point in my life, although I have done cash cars earlier in my career, I have budgeted financing a car into my monthly budget to ensure that I don't get brand new cars. I do get a used car still, but I finance one so that I can have it better than what I would be able to afford by just using my savings to purchase that car. And then I work on a plan. Again, I have a plan before I even buy about how I will be more intentional and rigorous about paying that down, so I can minimize the amount of interest I pay, but also while getting the advantage of having a newer car that will have less maintenance on it for the lifetime of the car. And I really try to keep my cars as long as possible. On average, I've kept them anywhere from 5 to 7 years, just to get the most out of it, but also having the benefits of having a reliable car. What's your experience been on the cash side with the car buying experience?
Yeah, so I usually think, okay, again, how much is it going to cost us to get the car that we want? And so I'll say, okay, I'll have a new quote unquote car in 5 years. And then of course, by the time you get to that 5 years, it's 5 years old. So it's not new. We buy used cars, but yeah, I have a throwback Toyota Camry that has been so good to me. It has great space, great mileage, can't beat the gas. So yeah, we buy used, and we buy usually a year or two or a few more back, so that it's still pretty reliable. It's still in its earlier years, but still, yeah, reliable and can be paid cash.
That's awesome. And I think that all that to say that there's really a happy medium in both. Wherever you are on your credit journey, your finance journey, there's always something that you can glean, and you can use a combination of these methods on your own journey. You can use one or the other. It really is just what works for you. I think there's a lot of different advice out there, and a lot of them are against credit cards or a lot against financing. But, something I read recently that kind of piqued my interest was that, a lot of times people that have good credit, it's not because they have zero credit card debt or, they don't have a different types of account, whether it's student loans or car financing. They just understand the system and they know how to use it. And I think that the same can be said for people who primarily use cash. They understand the flow of their money. They understand where it's going, how it's going, and how to, it's all about how you build your journey to get there.
Yeah. So some people, so I was going to add in, so some people that have kind of not the highest credit score, it may not be terrible, but it's not an 800 or an 810. It's not because they have made terrible credit card choices. It may be because we're not out there using credit at all. And so even if you've used it once or not used it once, it just reflects as a quote unquote negative score. But just because we haven't been, living in that space, operating from the space of credit cards.
Absolutely. And I think, wherever you are in your journey, there are some great tools that are out there that can assist you with that. Number one, as we kind of alluded to at the beginning, really connect yourself with some type of mentor, financial advisor, financial professional to help with your financial planning journey. I think that'll be key. If you are at a larger bank, even if at some credit unions, whatever bank that you're connected to, if you're not, there's usually also pretty great resources out there online, but connect with someone there, make an appointment to speak with someone, talk to them about your specific financial goals. We wanted to leave you with a challenge today. I think one thing important is to get a copy of your credit report. You can go to freeannualreport.com. And you are entitled by law to get one credit report from each of the three credit bureaus. So TransUnion, Equifax, and Experian. If you go to freeannualreport.com, you'll be able to pull one of those. A really quick tip to think about is you don't have to get them all three at the same time. You can actually get those out so that you can have it every 3 months if you'd like. So just go in and request one month, or at the beginning of one quarter, next quarter request the other. That way you can always kind of have visibility to your score. There are also some really great websites out there that you can go to, such as Credit Sesame, Credit Karma, that you can have access to your scores. Definitely take advantage of those and make sure that you have visibility and understand what is on your credit report.
Also, annualcreditreport.com. I don't know if you mentioned that one, Kim. And even cash users, for those of us out there, it's still important that you pull your credit report because you want to be able to debate any discrepancies that may be on there that are negatively impacting you. Even if you are not using credit or credit cards on a regular basis, I still pull my annual credit report. And so I think that's very important to do. You never want people to have information about you that you have not looked into yourself. So if businesses are saying there's something about you that they find a little strange on your credit report, or some kind of company that has pulled it that's going to provide you a service, you want to have that information first. You want to know what's out there said about you. So check it anyway. The last challenge that we want to give you all out there for today's fix: set a practical, disciplined savings goal. And please feel free to circle back to our week 1 episode on goal setting to learn how to do that. But I would definitely recommend to set a practical, even if it's small, disciplined savings goal, and you'll really begin to see some positive changes. And you'll be able to have more flexibility about if you're going to pay cash or if you're going to use credit. So help yourself this week.
Yes, and basic savings accounts are typically free to open. Usually the minimum deposit is about $25. So that's a really easy thing that you can do to start saving if you're not already doing that. If you are, it may be worth looking at your savings goals. You want those to continue to increase as your financial situation changes and you can afford to save more as you're getting closer to retirement. But just some things to think about as you are planning and thinking about your financial future.
Thanks, Kim. And one other thing I would add is check the mail. Sometimes I know we throw away the little cards that come from banks in the mail, but a lot of times they will give you insight into promotions that they're running. If you open an account with them, they may give you I've seen up to $500 for opening an account and leaving a certain amount of money in there for the first, say, 90 days. And so you can pay yourself that way and get off to the good foot, just by doing that as well. So hope that helped.
Yeah.
And we'll see you all soon for another 15-minute fix. Thanks, Kim.
Thanks for joining us today. Looking forward to talking with you all again soon.
Have a great week. Bye.